There's no doubt that MSTY has been the GOAT for high yield dividend investing in recent times. In fact, many investors have gained back more than 100% of their initial investment. But can you still rely on MSTY to deliver the returns? And what's happening exactly with strategy in recent times? Well, the reason why MSTY has delivered such outstanding returns is the implied volatility that strategy has delivered. You notice in our chart that strategy had a really high IV, but recently that IV has dropped to the mid 40s. What that's meant is that the dividends have dropped from a whopping $4 US a month down to just over $1. So this IV is crucial for dividend investing in strategy. Unfortunately, as the IV continues to decline, we can expect that dividends too will continue to decline. Now, is that necessarily a bad thing? Well, it's not necessarily a bad thing. Many mature companies don't have excessive IVs. We think of companies like Apple, Meta, Amazon. Their IVs are quite stable. Because of that, dividend investing isn't necessarily that profitable. But what it does do is deliver long-term stability and even capital growth. If we look at a chart for recent times, we'll see that strategy has, in a total return, outperformed MSTY. Now that's to be expected as the IV continues to drop. However, when we factor in a new ETF from Defiance called MSTY, which is a weekly ETF, we see that in recent times MSTY has done considerably well. It has outperformed the others. In fact, MSTY is the lowest of the three, strategy being the second and MSTY being the first. But overall, if you compare MSTY with strategy over recent times, it has been lacking in total return. So what does that mean for investors? Well, past performance is not necessarily an indicator of what will happen in the future. But one thing is for sure, is that if the IV continues to decline, it may not be that dividend investing will be as profitable as it has been in the past. It may be more profitable to consider strategy as a more long-term capital growth stock, which would necessarily mean that you should perhaps consider investing in the underlying rather than in an ETF based upon that. However, if you do consider investing in an ETF based upon strategy, it may be wise to consider that your returns may not be 140% per annum. They may be more realistic in the future. So these are things to consider in mind. Look at that chart again for the IV for strategy over recent times. You'll see a drop. Now, as long as the current US administration continues, strategy may become more of a long-term, more of a stable stock to invest in which case the IV would be considerably low, and the dividend returns would also be lower. However, things can change, administrations can change, and if that occurs and cryptocurrencies are no longer as profitable, well, you may see the IV return, in which case MSTY and other funds such as MST may gain in IV and may gain in dividend payments. So you might want to keep a track. At the moment, it seems that with a low IV, investing in the underlying is very profitable. Should the IV increase, then maybe the ETFs based on strategy may be the most profitable investment you can make. Look forward to speaking again with you soon.